we'll kind of,
by design.
Yeah, exactly, was by design. and it's totally obvious once you saw the Fox one and the way he ended that interview with Charles. It was very obvious that was all on purpose, and he is not a fan of CNBC. We read you loud and clear, RC.
Wonder why.
Yeah, I did pretty good. Yeah, I know. Well, we'll go through this, but as I was breaking it up, you can see they're obviously asking questions. They're trying to put him in an awkward position in a lot of these in a lot of these areas. Damn near set up in a couple spots, and he wasn't taking the bait, and he wasn't going to play nice either. And I don't know. I almost feel like he went into this thing maybe planning on giving a shitty interview. I don't know. We could play tinfoil in here. So I'll start with CNBC part 1. I guess we'll try to get through the whole interviews here. You guys shout out if you want me to stop it, but I'm going to play it. So let's go.
Sounds good.
GameStop stapler that damaged a Nintendo Switch, starting what has been dubbed the Staple Gate, has now hit the auction block, and for a good cause. This morning, we are talking to GameStop CEO Ryan Cohen, who's a little bit behind some of this. Ryan,
snicker right before he goes to him.
What is going? I have about 1 million questions about what's going on with GameStop and your investments and everything else, but let's start with the stapler. It's up to what, $250,000 right now?
Yes. So we had our store in Staten Island on launch day, and the store manager took the stapler and stapled it into the Switch. So we damaged the Switch, we refurbished it, and now we're auctioning off the stapler, the Switch, and the actual, and the basically it turned into a collectible. So it's right now $250,000. I'd originally said 6 figures. I'm going to throw in my underwear.
Here, real quick, I want to say I feel like that collectible part was on purpose. He made a point to say that, and I feel like maybe that's the point of all of these interviews, is to make sure that we are talking about GameStop in terms of collectibles. Kind of seems like how it is. It just body language, watching the interview. What's that guy's? Is it Brian? What's his name? Do you guys know? Sozi. So the guy
Andrew Sorkin.
Okay, so I was way off.
The interviewer.
The guy interviewing him here is Andrew Sorkin.
Yeah, it just starts off a little
Andrew.
snotty.
Andrew the Cuck Sorkin is what I call him.
It's gonna be in the intro. All right, let's go.
We've surpassed that, obviously, and now 7 figures. If we get the 7 figures, I'll personally deliver the underwear in Miami, and we'll take a trip to McDonald's together.
Your dirty underwear?
Do you believe the underwear is?
Yeah, a little smile.
That's hilarious.
That was good. All right, I'm gonna keep going. All right.
Underwear, is it going to advance the price, and are you going to sign the underwear?
I love the thoughtful pause here.
I will sign the underwear. Whether it will advance the price or not, I'm not sure. We'll see.
And just so we're clear, is this you said a trip to? It's a trip to Miami, or they got to pick it up in Miami where you live?
I will fly them to Miami, and McDonald's is on me.
And McDonald's, how much stuff can they get at McDonald's?
Whatever they want.
Wow. I mean, that...
Wow.
I could order a lot at McDonald's. I don't know if I could get up to the price, though. Before we even go farther, who do you think is...
All right, so okay. Get
up to what price? Like, why would you even try to
think he's implying that they would have to get like $250,000 worth, or like $1 million worth of McDonald's food in order for the trip to be worth it. As if there's no intrinsic value in meeting Ryan Cohen.
Yeah, right. Seriously.
Yeah. No, it's just the whole thing. He's just being a bit of a smartass.
Kind of insulting, honestly.
Yeah, the whole time.
Exactly. Yeah.
So you can get the vibe. Already starting off like, here comes my favorite of his answers. He gives a lot of really shitty answers, by the way, and it's great. So here.
Yeah.
So much mutual respect here.
Before we even go far, who do you think is bidding on this?
I don't know.
I don't know.
Are you
stupid
fascinated
Why would he
by
know?
this sort of fascination?
That's a good point. I thought of that too. Why would he know? Like what?
eBay doesn't tell you who's bidding on it.
No, that's a dumb question. And, this is a theme in this interview we'll see where there's multiple times where he's trying to get Ryan Cohen to say that people who follow or invest in GameStop are like crazy or wild.
Yep.
So that was the first one where he was like, "Hey, who do you think is bidding on these?" And and he what did he expect Ryan to say something like, "Oh, we have crazy investors that love this stuff." No, fucking shut up.
Like,
I think he was trying to get him to say something like a bunch of autistic people or something like. I don't know what else you would expect him to say here. Like, it's an anonymous platform until the winner is determined. So
bad question. And then at the end they talk shit like it was bad answers. But we'll go on.
With GameStop and with you, I mean, the fact that people would want your underwear. I don't do a lot of interviews where I ask about the underwear, Ryan.
That's fair. Yeah, I'll give him that.
It's a nice underwear.
What kind?
Don't tell me the kind that has those little holders.
No.
Oh, okay.
Let's move on.
Only the winner is going to find out.
Only the winner is going to find out.
All right, hold on. Sorry. All right, so we'll keep going now. I think
Ryan, let's talk about where GameStop sits
banana
right now,
hammock.
And
I don't know if you heard
just
that.
where you are on the journey. And I mean, I remember talking to you a million years ago, obviously during the sort of GameStop frenzy. But where are you from then to now?
We're a much more profitable business, smaller business, less stores, very strong balance sheet. We are, we've gotten our costs under control, and we've changed the business from a reliance on hardware and software to a significant focus on trading cards and collectibles generally.
And where?
Pretty standard answer. I think he kind of gives that on the next interview too. But it is what it is.
And that was also a prominent theme in the Bitcoin conference interview as well.
Yeah, and we heard a few of those other things too later on. Okay.
Mm-hmm. Yeah. And how do you think about crypto in the middle of all that?
We made an investment of just over $500 million into Bitcoin, and I look at it as a hedge against inflation and global money printing, and we'll see what happens. So,
but how much should people who are investing in GameStop think of you as some kind of like portfolio of assets and maybe even like a mini micro strategy or something?
As soon as he asked that, my eyes rolled. Like you already knew what he was going to say.
Yeah. Well, and go ahead.
Go ahead.
Okay. So like, I find it so interesting that he attached a number to their Bitcoin investment here because one, we don't know their cost basis yet, and we won't until their next earnings. And we talked about this a little bit on the last show, and Bad Robot and I had a little bit of a really good conversation since then to clarify that conversation that we had too, because while the FASB rules now do only require that you reveal specifics about individual investments if they are quote unquote significant, you do still have to reveal your aggregate your aggregate cost basis. So either way, I think we are still going to find out their total cost basis from the second quarter on their next earnings, but that's still not until September. So you know, that's a long way off at this point. We still have basically 2 months before we get specific numbers on that. And so this is the first peek behind the curtain, if you will, on their cost basis theoretically on Bitcoin. Now, I say theoretically here because he said we made an investment of just over $500 million into Bitcoin. Now, does that mean that they spent over $500 million on their Bitcoin when they bought it? Probably. Yeah. But that also imputes that they spent at least, I think, around $106,000 per coin.
Yep. There wasn't a lot of time where it was there in that window either. So we could almost find a day.
So previous to the Bitcoin conference airing it. So, it did hit the 112,000 all-time high before the interview there. And so there is a window there where it's possible, but it seemed likely to me that they would have bought it at a lower cost basis, like somewhere in that 95 to 100,000. Now that $5,000 to $10,000 range is not really all that significant, especially given where Bitcoin's at right now. Like it really isn't that significant. But
the other thing too, Paulie, is that the way he framed it is we've made a $500 million.
Yeah, we made an investment of just over $500 million. Like that doesn't exclusively mean that they spent $500 million.
Well, it also doesn't exclusively mean he's talking about the period from May 5th to June 10th.
Right. Exactly.
Right.
Yeah.
Right.
Like because it could mean that they've added to their position since then, but he's not telling us how much.
Oh, I like that.
Correct. Yeah, because Bitcoin did dip to around 102,000 or 100,000 end of June.
Yep.
So he could have picked up more, Yeah.
All right. I'm going to hit play.
And their 4,710 Bitcoin at the time of this interview was worth approximately $560 million. So,
right.
There's just so many different ways to interpret what he said here. Yeah. It leaves the door wide open for speculation. But it does give us a little bit of a glimpse behind the curtain, is all I'm saying.
Yeah, and it was kind of the first one like that. So
exactly,
pretty good stuff. All right, here we go.
No, we have our own unique strategy, and we have a very strong balance sheet, over $9 billion of cash and marketable securities, and we will deploy that capital responsibly as I would my own capital, and only look for opportunities where the downside is limited and there's a lot of upside. So we'll be opportunistic when we see those opportunities.
I like that. That was good.
Yeah. Really, my biggest takeaway there is something I've really been screaming from the rooftops ever since GameStop announced a Bitcoin reserve, is that, and Sorkin, again, just like the broader markets and commentators, a lot of Bitcoin bros, etc., have tried to kind of, without saying, sneakily just establish that, GameStop's doing the MicroStrategy thing, right? Yeah. Sorkin just, again, was like, are you just like a mini MicroStrategy? And I think this is really important, what I'm about to say. I think a lot of the market, not just commentators like Sorkin, has been trying to characterize GameStop as 100% Bitcoin proxy, or the Bitcoin proxy being something GameStop is turning to because their business isn't working, right? Wink, wink. This is not true. And Ryan just once again clarified in the last 5 minutes of his responses, not just with the response to the last question, that not only is this not the case, GameStop has a solid quarter-over-quarter profit-generating machine, and that they only deployed a small portion of their capital into Bitcoin as a hedge, whatever you want to call it, but that GameStop has its own unique strategy. It's definitely not mimicking any current public company on the Bitcoin. I shouldn't say any, because some public companies on the Bitcoin standard are actually being defensive or just allocating a small portion of it. But it's not really seen that way, right? People are like, oh, look, these companies are turning to Bitcoin because that's the new business. That's not the case with GameStop. Ryan himself just clarified it. So there should be no question going forward whether GameStop is trying to become a Bitcoin proxy.
Right.
Nice.
Yeah. And I think one other important thing here is that he did say we have over $9 billion of cash and marketable securities. So that does introduce a little bit of ambiguity here on what they may have done with their cash since the last update, because as far as we knew, especially since what their what the mutual fund filing that showed that they had a fat stack of cash sitting in the mutual fund, it is possible, based on his statement, that they may have deployed some of that cash into marketable securities. And I also want to clarify, Bitcoin is not a security as of present. So, or, you know, that's something to note here, that cryptocurrency, digital assets are kind of in their own asset class as far as this is concerned. So their cash position and any investments into marketable securities, which would also include you know, T-bonds, like technically, you know, that it would be, I think, cash equivalents rather than marketable securities.
Yeah.
If you want to get technical about it, but
yeah,
I'm just pointing out the fact that his wording there was likely deliberate when he said cash and marketable securities, because he could have just said cash. But he threw in marketable securities. It throws in some ambiguity, kind of leaves the door wide open as to, well, you know, you don't know what we're doing with it.
Yeah.
Because last quarter it was just, you know, throwing it in T-bonds and taking 4% interest and being fat and happy with it. But if you take 4710 Bitcoin, take the price at the time of the interview, and throw $9 billion in cash on top of that, divided by the current share count as of the last 10Q, that's a asset floor of liquid assets of 2137 per share.
Balling out of control. That's good. All right, I'm going to move on to the next one. Good stuff.
Yeah.
Well, I'm curious what you think of your shareholder base these days, again, because I think so many people think about this shareholders during what was this GameStop frenzy. And just your ability to take to X or social media and get people, as I said, excited about what you're doing, and how you think about that. It's very unusual.
What do you mean?
What do you mean?
It's just unusual. I mean, you and maybe Elon Musk, and I don't know if I...
We'll get back. That's just the dumbest fucking question I've ever heard. What do you want him to...
You see the look on his face right there?
Yeah.
Well, but this is what I meant earlier. There's multiple seeds he's laying to try to call investors crazy, and Ryan's not having one bit of that.
No. What do you mean? I love it. If the guy's voice wasn't behind it, I'm gonna figure out how to just get that "what do you mean" out and use that. But anyway,
I don't know if I should put you in the same category, but have sort of a very special ability to have this sort of fan following that's sort of very unusual. You can post an emoji of something and people go crazy.
Setup.
We have a loyal shareholder base, clearly. I don't think there's many situations of public companies where the CEO receives absolutely no compensation and is, I mean, you can never be completely aligned with common shareholders because everyone has a different cost basis and has a different time horizon, but I don't get compensated. I've invested my own personal capital. I don't have any perverse incentives, and the goal is to max.
The face he made when he said that, by the way, is just like he's just disgusted in fucking overpaid executives.
Maximize shareholder value. So, you know, you see these public companies where you've got executives and they're collecting tens of millions of dollars or hundreds of millions of dollars in risk-free compensation, and frankly, it's despicable. And so that's not the way that I run GameStop.
That was
That's
good.
my CEO right there.
Yeah, that was good.
Yeah.
That is my CEO.
Oh yeah.
That question was shit. That was totally like he just got. I don't know when it got done, but he just got done with a lawsuit over fucking emojis and tweets, and they're gonna ask him a question like that, and you can see in his face. Anyways, go ahead.
No, and again, that was Sorkin's third try to kind of paint, whether he's trying to get Ryan to respond or not, to paint shareholders as crazy. And Ryan really, he avoided the first two times, and this time he went in and he clarified a couple things. Our shareholders are very loyal. There's no question, right?
Yep.
To just respond to his whole diatribe about, oh, what do you think about how people react to your tweets? Our shareholders are crazy. And then he said, Andrew, ask yourself why. Why are shareholders so loyal to the company? Well, there are not many companies on Wall Street that are run like this.
Yep.
That's why, you dumb bitch.
Yeah.
Sorry.
And there's a point later, he calls himself, I think it's in the Fox one, he's on the retail side of this trade. He always has been. So
yes.
One of us.
He called himself a retail. I love that.
Yeah, I did too.
One of us.
All right. I'm going to move on. Paul, you got anything with that before I go?
No, we're good.
No. Okay.
I actually have a broader question about investors, since I think you have an unusual relation with them. We've been talking on the broadcast for the past couple of weeks about this push towards folks who are tokenizing effectively private companies, shares in private companies, to what might be described as unaccredited investors, so people who have less than $1 million. There's a big argument being made that we need to democratize investing, that the real opportunities are in private investments, and that these sort of derivative instruments are a great opportunity. There's other people who say this is crazy, and we have regulations for a reason, and for some reason they're not being applied or at least listened to in this context. What do you think about all of that?
What do you think?
I don't have much of an opinion on it. I haven't looked into it, so
the reason
I have
I ask
nothing
is
intelligent to say on the topic.
Okay. No, the reason I ask is more just about sort of the opportunity set for traders today, and sort of the opportunity to make money in these unusual, I don't know if they're unusual, but different ways, and this idea of democratizing investing, which I think a lot of people look to what you've done and think that this is about democratizing opportunity.
What?
I think that there's a lot of risk in investing, period, especially in individual securities. And I don't give out investing advice. And I've always said the best thing to do for most people is to invest in low-cost ETFs. And you can lose a lot of money investing, and you have to have the right temperament for it. So it's for the very few. But in terms of people being allowed to invest in whatever the hell they want, people should be allowed to invest whatever the hell they want, and they take on those risks. And so, I mean, that's generally my point of view, but understand that it comes with significant risk and volatility, and you got to have the right temperament and do your own diligence.
Are you still a passive investor in Apple and Netflix and I think Wells Fargo at one point?
Yeah.
And
in Apple and in Wells Fargo.
I like that he cleared that up. That was at least, some not new info, but he reaffirmed that he's still invested in Apple and Wells Fargo. So
and he's apparently exited Netflix.
Yeah, that too.
Right.
And this is
and you'll love that cash into GameStop.
Right.
Yeah.
Right. Yeah.
Yeah.
And Netflix, by the way, has kind of exploded over the last several years. Yeah. So he may have taken significant profit on Netflix depending on when he exited.
Sure. Yeah.
Yeah.
But I also think it's interesting that he started out with I have nothing intelligent to say on the matter, and then when they clarified the question a little bit to try to maybe bait him into it a little bit, I thought he did give a very thoughtful answer to it, but he said a couple of important things. You should be able to invest in whatever you want.
Yep.
But understand that it comes with significant risk. And as long as you're willing to accept that it comes with risk and potential volatility. I thought it was interesting that he mentioned volatility. But the other thing that I would add to it personally is that if you are going to be given the ability to invest in whatever you want, it's only useful to the point that it is a liquid asset. And
I actually have a broader question about
it doesn't. Yeah, it doesn't do you any good if you can buy something that you cannot sell. And so as long as you can buy something that is tradable and other people want it, then great. And so I guess for the options traders out there, an example would be if you're buying deep out of the money calls and you're trying to unload them if you're too close to the expiration, that is an illiquid asset. You can't sell it. There are no buyers.
Yeah.
But if you have a highly liquid equity like SPY or even GameStop, like GameStop as illiquid as it looks on some days, like it's pretty liquid. Like it's readily it's readily traded. You can put it in an order, and if you needed to sell a share, you can sell a share, and there's always a buyer out there. But if you're trying to sell something that there's just no desire for people to buy, then it didn't do you any good to buy it. So that is also kind of the other side of the risk piece of it. So I think that Ryan Cohen did a good job touching on that from a risk perspective, but I think the liquidity side is also a piece of that risk. And so when you're talking about democratizing access to privately traded companies through the tokenization, and really what Andrew Sorkin was getting at was the recent announcement by Robinhood that they are going to tokenize ownership, right? OpenAI and SpaceX, right? Yeah, they're selling tokens on their blockchain for ownership in private. But as far as I'm aware, I don't know if that actually represents any real ownership.
No, it doesn't. Actually, OpenAI put out a tweet after Robinhood's announcement saying, absolutely not. None of what you buy from this company gives you any access to OpenAI equity, which is hilarious.
So that's sort of the very slippery slope there, where people are like, hey, I've got this tokenized ownership, except it has no representative ownership of the actual underlying thing that they think that it's tied to. And so, to the extent that tokenized ownership represents actual ownership, I think that sort of democratization probably is meaningful and good. But if you're just out there, honestly, I think the best analogy for this is short selling, naked shorting. If you're just out there saying, hey, I've got this security that I want to sell but not own it, would you like to buy it? That's kind of the next analogy to it that I can think of. And if we did that with literally anything else, we'd be going to jail for fraud. And I was trying to explain this to someone months ago when I was on a trip in a car with them, and I was just explaining to them on the road. They wanted to know what naked shorting was, and I was like, well, if you just saw this car in front of us and you wanted to sell it to someone, but you don't own it, like you don't own the title to it, then you would just tell someone, hey, I'm going to sell you this car, but I don't have the title to it yet, but I'm going to get it later. And you just kind of have to take me at my word for it. But
you literally couldn't really sell it.
Right. I could not without it being fraud. Right. But if it's a security, it's fine. Right. So, that's kind of how the system is right now. And so,
they're trying to make it worse, it seems. Let's tokenize it, but not make it real.
Yeah. And so if we're going down that path, it really does have to represent actual ownership for it to mean anything. So
it depends on who's trading it, where it's being traded. Okay.
I think tokenization can be and will be meaningful, but it also does have a slippery slope trapdoor if people don't do their due diligence.
We could be in the same exact spot, just different people running the brokerages. So let me skip ahead here. Hold on, let's see what it was. 10 or 15.
Think it's the strongest brand in the world.
Apple.
Yeah, I skipped ahead a little bit. We'll have to go from here.
Everyone is glued to their
another question,
iPhones,
not about GameStop.
People aren't switching devices. they can do a much better job in artificial intelligence. There's no question. Siri is the same thing that it was 10 or 15 years ago, and there's definitely an opportunity for them to improve in AI, but they own the ecosystem, and they've got a very strong, enviable business.
Do you think they need to be super strong in AI, or that can just be a layer from somebody else on top?
Only if they can make money.
Love that answer, by the way.
You mean only if they can make money from the hardware part, or you're saying only if they can make money from folks who are paying them to be the layer on top?
Yeah, it's not clear who the winners in AI is going to be ultimately. You look today, ChatGPT is clearly number one, but we'll see if they can ultimately develop a real mode in AI, or ultimately once everyone's models are at the same level, how much pricing model there will be between the different languages and the different models is TBD. So I think everyone's trying to figure out long-term, how do you monetize AI? There's no question AI is incredibly disruptive, but who the long-term winners are going to be is I don't have a point of view at this point on who's going to be able to ultimately create a durable competitive advantage in the space.
You do have a lot of money in Alibaba, so I imagine you think that they have a credible claim in the AI world?
We're supposed to be talking about GameStop.
I love that.
I'm just curious where you land. Well, let me ask you, in terms of trading cards, maybe...
He winked after that question.
Nice. All right.
There's so much to unpack there.
It was it was nice to get his perspective on other companies. I did enjoy hearing his philosophy on as long as they make money, that kind of stuff. So that was cool.
Well, yeah, because he's an investor, right? He wants a return on his investment, and if Apple's not, if they're not getting a meaningful return on their investment in AI, then it's moot, right? And he's actually spot on too.
Yeah, and that's going back to the Larry's tweet of like partnerships versus acquisitions, or building your own thing as a third thing. You have to calculate what's the return and how quick, right? And with Apple, we know Ryan's a huge Apple fanboy, right? He's one of the largest individual retail investors in Apple. And what does Apple do? What has Apple always done? Apple doesn't really innovate in terms of putting out a product first. They go into established markets. They see the products that have the market share, and they make one that's better than all of them. And then they slowly capture the majority market share, right? So, I don't think, I think Ryan obviously knows this. I think Ryan knows Apple's being patient, but also, to me, that's a huge statement. And he mentioned ecosystem, like Apple has the ecosystem. He said, everybody, if you look around, everybody's looking at their iPhones already, right? Yeah, Siri's 10 or 15 years old, but it doesn't matter. People are still looking at their iPhones, right? And he mentioned the ecosystem, and that really rung a bell with me in terms of, okay, we know Ryan's customer-centric, right? We know Ryan's a big Apple fanboy. So really, what's he doing with GameStop here? He's building this ecosystem at GameStop. He's building this trust. It doesn't take 2 years to build trust. It doesn't take 3 years to build a solid ecosystem where any product you offer, every single customer in that ecosystem says, I want it, without even thinking, right? Yeah. So I think Ryan's, it's just important to note here, while he's not trying to copy Apple, he's not trying to copy Berkshire Hathaway, he does look up to Warren Buffett. In an interview in 2018 or 19, he said 2 of his biggest influences are his dad and Warren Buffett. That's a huge statement, right? Becoming the largest individual shareholder, retail investor in Apple, that's a huge statement, right? So, he speaks with actions more than words. And I think it's just worth noting here what I think Ryan's trying to build, given his love for these companies.
Yeah.
So,
All right, I'm gonna put on the last one. This one's almost done.
Just curious where you land. Well, let me ask you in terms of trading cards. Maybe it goes to crypto and trading cards. Do you think that crypto and trading cards ever go together in some kind of digital way that we don't know about?
It could.
Real quick, this is super important. Yeah, this is important to me. I'm gonna let it keep going because like this is good stuff. But anyway,
There's opportunities.
Give me a little more.
We'll see. We'll see what happens. But
Hey yo,
you know, we've there's opportunities.
Can you tell us about those opportunities in terms of just how to think about it for the investors or even the customers of GameStop right now? Like what to expect?
There's an opportunity to buy trading cards and to do so using cryptocurrency. So we'll see how much there is on the actual demand side for that kind of product. But there's definitely an opportunity to actually use crypto in the space, and the utility of crypto beyond and investing is a hedge against inflation. I think that so far that's been the biggest demand for crypto, and so the ability to actually use crypto within transactions is something that is an opportunity, and it's something that we're looking at.
Is that stable coins? Is that Ethereum? Or are you thinking people are going to actually use Bitcoin to pay for things?
I mean, we're going to look at all cryptocurrencies.
Okay. Ryan, we're going to leave it there. We appreciate it. We wish you lots of luck today with this big auction.
I'll let it finish. It's almost done. And
make a lot of money
because that was good stuff, though.
And if somebody wants the stapler and the underwear and McDonald's, you can go out and get it this morning.
Are you going to place a bet?
Well, you might have priced me out already because we're at what are we at 250? It might be going up as we're talking. So I don't, if it had been at 250, I think that would have been a steal. 249, 700. But,
it's not too late. You've got about a day left.
I got a day left. I may do a GoFundMe page to see if I can maybe crowdsource some money to put.
All right, that was that. That was painful to watch in the morning. It was just a little bit, it's third time or fourth time through for me. It's better watching because you kind of get it, especially after seeing Charles Payne, you realize that he was doing this shit on purpose. But, as you've listened again, they weren't very good either. They weren't providing very good thought out questions. It seemed like a whole bunch of I gotchas and setups that they were trying to get, or just short questions. Just, I don't know. It was a shitty interview on their part, and Ryan met that energy and did an amazing job with it too. So, but anything about that last part, because I found it pretty interesting. That
was maybe the most interesting part of the interview in terms of in the context of bad questions and Ryan being like, what are you talking about? Okay, let me try to answer this. That was the one where Ryan was cheekily smiling the whole time.
Yeah.
And he was clearly saying, we have explored that. We're gauging demand, and that's where we start before we make a product or a service. And clearly we have identified there is demand, so we'll see.
Yeah. And we're not going to tell you, fucking CNBC, at all.
And we can get into numbers later when we're talking about collectibles, but in terms of what Andrew Sorkin asked, in terms of the intersection of trading cards and blockchain, there is demand. There is an existing market. But it's small. It's small. It's about 5 to 10%. It's about 5 to 8% of the trading card and sports card portion of the collectibles market in the U.S. is either blockchain based or, like Ryan said, which is very specific words. He said people using crypto to buy collectibles, which is very specific, right? That's not just that doesn't just mean trading cards are on PSA is on the blockchain now. No, that's very specific. He's saying an opportunity whether it's an app, an existing app, a new app, a website where people can use crypto to buy collectibles. That's a very specific thing to say. Anyway, go ahead.
Yeah, no, that's good. Before we move on, Paulie, did you have anything you wanted with this guy?
Yeah, I would also just say that, to your last comment, Bad Robot, it's that much market share that you know of so far. I think that's going to be a growing portion of the industry. I think that has tremendous potential for growth, especially if GameStop's getting involved, because I think that they can be a little bit of a catalyst for it. Yep. And I do think that there is definitely growing demand for that. I know that there are already pretty good companies out there that are kind of experimenting in this space. I've had a little bit of experience with it myself, doing the digital pack ripping, and then you have the option to either, put it on a digital marketplace or have the physical card shipped to you. I think Courtyard.io is one.
Yes.
And so there is a
really cool.
Yeah, there's a peer-to-peer marketplace component of that. They kind of digitally animate opening the pack, and then there's an instant buyback option. There's a peer-to-peer marketplace. There are fees involved with that, but you buy your packs with the USDC stablecoin, so the US dollar stablecoin, but I thought Ryan's answer here was really interesting when he said we're going to look at all cryptocurrencies, and I had a comment on this earlier this week where just putting on my business consultant hat from when I worked in fintech in the credit card processing industry. My personal experience is that if you are a business owner and you limit the ways that people can pay for the goods and services that you provide, so like just using as an example, if you are trying to take cash only as a business owner, you are limiting the number of people who walk through your door. If you have a sign on the front of your building that says cash only, then some people will walk away because they don't have cash. Yeah. Even if you have an ATM inside, because maybe they don't want to pay ATM fees. Then
I literally don't even go into cash only business because I don't carry cash.
Yeah. And some people may do it on principle just because they're like, oh, you look like a money laundering operation. That's just a perception that some people will have. And so when I was in the credit card processing industry trying to sell credit card processor services to people, that was one thing that I was able to work with business owners on, is just that, like, look, you may increase your total sales by 20%. Is that worth it to you to have a 3% cost on your total sales? And so I bring that up because if Ryan is talking about we're going to look at all cryptocurrencies, so just if we're looking at the total addressable market here for how they might bring in additional customers or even just increase the spend from their existing customer base. If you want to talk about how they might increase revenue or just increase activity, if you suddenly start accepting Ethereum, Litecoin, Dogecoin, Pepe, Fartcoin, just go down the list. If you start accepting all those things in addition to Bitcoin and the US dollar and, Klarna and, regular credit cards and cash, like if they've just got all these things as a list of the ways that people can pay, they don't have an excuse to not shop at GameStop anymore. Oh, you want to shop here? We'll take whatever form of money that you have. We accept all of them, and then whatever they do behind the curtain once they receive that is all good and well, because at the end of the day, everything has a value that can be denominated back in the dollar, because all of them are liquid assets that are tradable and they can be swapped either for the dollar or for Bitcoin or for whatever other store of value that you want. So if you want them to store their long-term value in Fartcoin, then they technically could. So
Sorry, I just giggled.
I know, right? Like as absurd as that sounds, like that's an option. And so, but I say that to illustrate the fact that all of this could be that torque reactor to drive the growth of their Bitcoin engine. And so, they've seeded it with 4,710 Bitcoin at this point. But if they suddenly say, oh, well, we've also seeded it with this many Ethereum, this much Litecoin, this much Dogecoin, this much shitcoin, whatever else they say that they've started with, or maybe they don't even start with anything and they just say that we're going to start accepting all of these things as payment, then suddenly they become a bank, and they can, once they start accepting payment in the form of those things, it's totally up to them what they want to do with it once it's in their wallet. So if they've got a good transaction model where it doesn't cost them a whole lot to, from a net perspective, once they receive the money. So if they, like, let's just say that their model is that they want to swap those coins for something that is maybe a little bit less volatile, because Ryan Cohen is a little bit more conservative. He doesn't want the volatility. He wants limited downside risk. He wants more upside. So if he wants something that has less volatility, maybe at the point of sale, he wants to swap it into something that's more stable. So maybe he puts it into a stable coin, and then later they make opportunistic investments when they want to. That there are going to be gas fees involved. So maybe the business model involves them, having some sort of a transaction fee that covers their swap fees, something along those lines. That's kind of what I'm thinking.
And on the business model, I think it's pertinent to say from our previous conversation about Apple, what Ryan likes about Apple, and potentially what he's trying to create at GameStop. And going into a market like this, again, I look at, I don't think Ryan's trying to go and create a new market. He's trying to go create a flywheel like this, if we want to call it that, of transactions, microtransactions, like you're describing, Pauly, within an existing market with existing users. So my brain goes, okay, in terms of blockchain, what are the biggest current use cases of blockchain, right? It's like DeFi, like trading, and gaming. Yep. Those are the two largest, right?
Big time.
So, so I don't think he would go into try and create a market for stamps and coins and get some microtransactions there, because it's a lot of work to make a new market, right? So he wants to tap in, as we've seen with the collectibles move, he wants to tap into an existing market and provide a service or a platform that's better or competing with existing platforms, right? And hope that people like the user interface, the features, the prices, the customer service, and start using it. So I think this is a really good point. I think he's going to, whatever he does in that field, he's going to go somewhere where there's an established growing market. And with things like the Genius Act and Clarity Act just passing, which really unlocks a lot of Web3 companies in the space already, this is the start of the gold rush, where companies can now, proverbially, like during the gold rush, move across the country just to go have a camp by a mine, right? To make some money. This is the time with the regulatory atmosphere, which, by the way, we know previously GameStop was trying to work with Apple really closely with their wallet, with their marketplace, but due to regulatory concerns, they kiboshed that. Now, this last Friday, the Genius Act was signed into place. The Clarity Act is headed to Senate. That's going to be passed and signed soon. Now it opens it up. Now he can go set up shop. Now he can go to Apple being like, hey, I'm your largest shareholder. I also want to collaborate, whatever, right? So anyway, this is all good stuff.
All right, so we'll get into the Fox interview, but did you have anything else that you had with the CNBC Bad Robot?
Yeah, one last thing, Pauly, with everything you were saying about just how GameStop or Ryan is thinking about that market, thinking about entering that market, etc. One thing that I can't help but think and have always thought is, one of Berkshire's their first few investments were into insurance companies, as we all know. And one of the things that really catapulted their strong balance sheet into what it is today is insurance deposits, insurance. I forget the exact word, but it's basically the deposits you pay when you sign up for an insurance policy, and the recurring monthly payments you pay for it. Those all go into a pool. Premiums. That's right.
Yeah.
The premium pools. The premium pools are what made Berkshire, right? And while something like this, like capturing microtransactions or facilitating transactions for collectibles or trading cryptocurrency, while it might not be as large and substantive as insurance premiums or premium pools, it is high margin revenue on the collecting revenue side. And then once it goes into the balance sheet, it's low cost capital to deploy, as in capital you didn't have an initial big investment to generate. So really, I think, when I call this a flywheel, I do think that Ryan's thinking about, hey, I'm in this for the long run. I'm going to make some investments over the next 20 years. But the first few investments I make has to have an extremely high return on invested capital. And it has to be something that's recurring and maintained with low effort, something like a marketplace or microtransaction. So I really think this is a perfect place that GameStop, I guess, is exploring. And, I'm excited to find out what it is that they reveal.
Yeah, absolutely. And I think the microtransaction piece is really key, because the other side of that too is that when you are involved in microtransactions using digital currency, you are cutting out a significant chunk on the middlemen. And like I go back to my experience and expertise in the credit card processing world. Your average cost as a business owner when you're taking credit cards is somewhere in the neighborhood of 2.5% to 3%. Now, an entity as large as GameStop may have the leverage to get that down closer to 2% or maybe even lower, but we're still talking about a significant chunk of their gross revenue just getting blasted out the door in fees to the credit card processor. And that's because a huge chunk of your credit card processor fees go to interchange, which is the chunk that goes to the card brands and the card issuing bank. So that's your Visa, MasterCard, Discover, American Express, and then the bank that issued the plastic itself. So the bank that the card holder has their account with. So those entities all get a piece of the pie every time that card is used. So all of that is divided up, and then the processor itself has their markup or their margin on top of that. And so when you cut out all of those middlemen, and then your microtransaction ends up just being the network or gas fee for the cryptocurrency transaction, that can end up being a fraction of a percent just by itself. And then there is no other middleman. So, I mean, that can be an enormous game changer, because we're talking about a lower fee on its own. And like you said, it's high margin, and it can also be very high volume. So,
I was just looking.
It's a money printer.
Oh yeah, Toast, the POS system for computers, they charge you 2.5% to 3.5% per credit card transaction.
Yeah,
that's significant. That adds up.
And when I was in the industry, they were one of my competitors, and they were a publicly traded company that I think had not, at that point, I haven't followed them since I got out of the business, but at that point they had not yet had a profitable quarter. Probably they were burning like $250 million a quarter.
Yeah, I mean, it's a pretty
it was nuts.
It's a nice system though. But anyways, we'll move on. All right. Yeah. So Fox interview, the darkness in the morning to the brightness in the afternoon. It was it was a joy. The whole day was fun. But anyways, here we go.
Things that we think or take for granted, things that we believe will always be there, they won't be. Things are changing rapidly, but it's hard. The acceptance level is hard. It's hard for several people, several levels rather. The elites, it's hard because they lose their power. They lose a lot of their grip. They no longer control the narrative, and they no longer make all of the money. For the masses, it's tough because you change day-to-day routines. You know, 9 years after the development of the first car, there was a movement to bring the horse and buggy back, right? They said, you know what, we tried this thing for a few years. I like my old horse and buggy. Obviously, that would have been a big mistake. So picking up on that conversation, look at where the market is right now. You got 11 sectors in the S&P 500. Only one is up, and almost the S&P is just only down fractionally, just that one sector, but it's technology. It's all about technology. It's all about where we're going as a nation. We are moving at the speed of light, at the speed of light. And there's a lot of companies and a lot of people are part of that. In fact, I wanted to share a story. Last month, and I'm sure most of you have heard this, right, during the frenzy of the midnight release of the much-anticipated Nintendo Switch 2, employees over at the Staten Island GameStop punctured holes in both the cardboard, the packaging, and the screens of the GameStop, right, as they were stapling on the receipts. This instantly became sort of a hot topic on social media. And then, of course, the CEO of GameStop came up with a brilliant idea. How about we turn this into a positive development? So on July 9th, the company began auctioning off what it's calling authentic relics of Staplegate. Right? And this is crazy. We're up almost to 300 bids on this thing. And the stapler, that's the infamous stapler. It's at $250,000. And here's the good news. All the proceeds will be donated to the Children's Miracle Hospital Network, or Network Hospital. All right, let me bring in now the brains behind this and so many other things. GameStop Chairman and CEO Ryan Cohen.
Real quick. So much better. Just the intro alone.
Amazing energy.
Yeah,
the enthusiasm is just off the chart here.
Yeah, versus hey, you got some investors, and so just the way the other one started. But anyways,
Ryan, just ask. So someone
hold on one sec.
Yeah.
Just one quick note too. I love the way that he brought him in because he opened the discussion by talking about how sort of all these companies in the S&P 500, they've kind of stagnated in innovation. And even the way they're growing is by just not really innovating. And then he sort of contrasts that with new age companies that are connected to communities, that are innovating through their products and services. And then he says, and on that, we have Ryan Cohen here, right? So I loved that. I love that intro.
Yeah, especially since, there is one company that, we're talking about here that there's only one requirement remaining that's keeping them from being considered for inclusion in the S&P 500, and that's market cap. So, they're about half the market cap right now that it takes to be considered for S&P 500 inclusion, but they have checked all of the other boxes. And I think it's just really interesting that he starts the discussion off about that, because GameStop is not a video game retailer anymore. They are a technology company. That transformation has been underway for the last 4 years. And I would argue that it is just about complete at this point. And I think Ryan Cohen is going to show us that very soon that it pretty much is complete. But I think Charles Payne understands that, and him making that comment here is very telling.
Someone calls you up and says, Ryan, someone at the Staten Island store is stapling holes in the screen. What were your first thoughts when you heard about this whole thing?
We got limited inventory, and they're damaging our limited inventory.
You thought about it like a shopkeeper. You didn't think about the public relations part of it, huh?
I thought about it as we got to get rid of them.
I got you. Well, I'm sure they're probably watching the show from a sofa somewhere.
Charles made it sound like he fired the guy, but anyways.
Sofa somewhere.
Yeah.
But I love how you turned this into something positive, right? Something uplifting. And let's be honest, your emergence as a CEO of GameStop has been uplifting. It's created a rock-solid groundswell of believers. And so what I did is so many of them reached out to me on X. I told them they could help me ask you the questions today. So this is what we're going to do. I'm going to get the first question to you. It's from a guest. He's one of my favorite guests. He's loaded up on your stock, Kip Herriage. And his question is, share your views on financial engineering in the GameStop way, and give us a snapshot of what GameStop will look like in 5 or 10 years. That's what everybody wants to know.
I don't have a crystal ball.
Yeah,
But
twice now.
if you look at where the company was from when I joined the board in January of 2021 and a few $100 million of debt, losing hundreds of millions of dollars, to where the company is today, $9 billion of cash on the balance sheet, and the retail business is running profitably, then, if you may be able to extrapolate and see where we will be in the future, but time will tell. It depends on macro conditions, but we'll see what happens. But we've come a long way in a really short period of time.
All right.
I mean, couldn't be any clearer. Our CEO, he literally just said to Kip, by the way, we don't have to get into Kip, but he basically said, when I joined, let's do some math, people. When I joined, losing hundreds of millions of dollars and hundreds of millions of dollars in debt. Right now, profiting hundreds of millions of dollars and billions of dollars on the balance sheet.
Yeah.
So take that rate of change from 2020 to now and apply it exponentially in the future, or even not exponentially. Apply it in a static fashion projecting forward. What do you think? What do you think I'm doing here?
Yeah.
Yeah.
All right. Let's see. So now I didn't edit part. These is good.
This is what we're going to do. I'm going to get the first question
So
to
hold
you.
on, let me.
It's from a GameStop
Sorry.
look like in 5 or 10 years.
If you look at where and a few hundred, then if you may be able to extrapolate and see where we will be in the future, but time will tell. It depends on macro conditions, but we'll see what happens. But we've come a long way in a really short period of time.
You've come a very long way in a short period of time, but I think now everyone's kind of thinking the catalyst, right? A month ago, I took my granddaughter to the American Dream Mall in New Jersey, and it was pretty much empty, except we came up on this one store. It's called Pop Mart. And I mean, it was just brimming with business. These kids were everywhere, and they're doing the collectibles, and they're doing all of this stuff. And I'm thinking, I thought about you. I thought about GameStop immediately. Now, how do you tap into something like that?
I mean, we've moved the business from a big reliance on hardware and software to collectibles. And so we're selling a ton of trading cards, both sports and TCG. And it's a much more durable business. It's not as cyclical as hardware, which, as you know, it's hit driven. The software business, hardware is every 6 to 7 years, and it's TBD in terms of the future of hardware. So we've got a much larger collectibles business today, and generally the business is much more efficient. It's going to be a smaller, less stores, but more profitable company. And most importantly, we're generating profits every single quarter now. So typically in the past, GameStop's only made money in Q3 and in Q4. And actually, when I joined the board and before I joined the board, GameStop was losing money every single year. I mean, it's hard to appreciate what a piece of crap the business was when I joined the board and what was going on in the boardroom and management. But we're making progress.
Yeah,
that was good. That's twice he mentioned collectibles now. So both interviews he made sure to talk about collectibles. He used the word crap. I know Paulie keeps track of that. So both the Bitcoin interview and this interview, the announcement, he mentioned crystal ball and he called the company a piece of crap. So
yep.
Take it.
He also he mentioned because he said like the reasoning or whatever question Charles asked him. He wasn't just like, yeah, and we're going to do what Popmark is doing too. No, he said that they looked into the metrics, the key performance indicators of that sector, of the specific products, compared them to the declining trends of some of the existing products GameStop offers, and made a bet with that data. So it was a very informed decision. It wasn't just like, oh, cards are cool, right? So, and he also stressed, the highly profitable nature of that move. And I think it's really important to highlight.
Highly profitable and consistent.
Yeah, because trading cards have, just from like the ones that how GameStop sells them on their website, they have like between a 35 to 48, 50% gross margin compared to consoles and games have a 5 to 18% gross margin. So much higher profitability in trading cards.
Yeah.
Nice.
Yeah. And logistically much easier to handle.
Oh, yeah. All right. So let's see where we are here.
I actually used to use this as a cautionary tale on a company buying back stock and rewarding CEOs with big bonuses while the company was itself failing. So you're absolutely right about the crappy part of it. Let me ask you about these earnings, the last earnings release. It's really, to me, it was pretty evident when the number came out. Everyone was focused on Bitcoin. All right, and everyone thought you would, because you had so much money, that you would have bought more Bitcoin. What's the Bitcoin part of the strategy here?
I look at it as a hedge against inflation, a hedge against global money printing. We've already made an investment, and we'll see. It depends on the price. So I don't want to lose money. That's the most important thing. And something could be a really intelligent investment at one price, and it could be totally idiotic at another price. So, I haven't called our shots, but we may buy more Bitcoin, or we may not buy more Bitcoin. We'll see what happens.
Interesting. Super interesting. Like, I don't know. It kind of goes to their strategy again, that where they're not just all about like being a Bitcoin holding company and that's it. They got a whole nother strategy going. I like it. I don't know. One day he's going to drop another buy on us and it's going to blow some shit up. It's going to be awesome.
Right.
Well, no, that's a really good point, because this morning I was like reading some comments from some Bitcoin maxi that I had made like a post. I won't get into it, but comparing Bitcoin proxies to non-Bitcoin proxies like GameStop. And anyway, some people were messaging me, and I was thinking, if Ryan came out and said, "Hey guys, I can't tell you what it is, but I have bought a vehicle that has 40,000 Bitcoin, about $4 billion, and it is paying me a dividend of 10%. It's paying the company a 10% dividend, a year, tax-free dividend a year. What does that mean? This $4 billion Bitcoin vehicle is giving the company $400 million a year. People would be like, holy shit, this is amazing. Well, guess what? That $4 billion vehicle is the legacy business that's GameStop now. It's doing about $4 billion in revenue. That's where I came up with the number, but it's cash flowing and producing around $300 to $400 million in profits a year. Right. So this is huge. If you just rephrase things, like if Ryan came out tomorrow and said, "Hey, big news, we acquired a $10 billion investment firm. We were just given it, and it has $10 billion in the accounts, and we have that now." People would be like, "What? This is amazing." Well, guess what? GameStop literally built that themselves. Right? Like, but they didn't phrase it that way. So people aren't thinking about it that way. People are saying, "Oh, what are they going to deploy it on?" Well, nothing. Yeah. They just acquired. Let's just imagine they acquired a $10 billion investment firm to stack on top of the $4 billion vehicle, cash flowing $400 million a year.
Yeah,
people would be like, "Take my money."
Yeah, and no one's saying, "Warren Buffett, what are you going to do with $300 million?" Like I'm waiting. Like it's kind of silly. Like if you are a savvy investment manager and you are waiting for the right opportunity, then you're going to know it when you see it. But there are so many people that are just like, we live in this microwave and credit card society where we want our food hot and ready, and we want to pay for it later. We want it now, and we don't want to pay for it until later. And that's just, on Twitter not. Yeah, that's right. But that's just not how Ryan Cohen runs GameStop, and he's tried to be abundantly clear about that from the beginning, right? Like he's like, I'm not going to call my shots in advance. This stuff takes time. The company was in a death spiral when he got involved, and that it takes time to turn it around. And we are seeing the fruits of that. but it is not going to be something where he can just take $9 billion and throw it into 0 DTEs on SPY or something. Like, he's just not going to do that.
But in the meantime, sitting cash also is a product. Money managers, investment firms, cash is the product. Mm-hmm. Money is the product, right? Yeah. And a good money manager finds ways to leverage that product, which is the cash, to create more money for investors, for shareholders, right? And that's what he's doing.
Yeah, actually, let me grab one piece of paper that came in the mail yesterday.
I'm kind of nervous.
I'm curious.
Yeah, me too.
Did someone send you money in the mail?
I wish. No, so this this is just the inner sheet, so there's no identifying information on this. This is the a semi-annual shareholder report for the Vest Bitcoin Managed Volatility Fund Consolidated. So this is a report that I get from a fund that I have like my retirement accounts in. Mm-hmm. And the interesting thing is, if you just look at the sector breakdown, you can kind of see like 87% of this fund is invested in mutual funds. Huh. And what's that 1.3%? I'm trying to read it through the paper backwards. So
I think it says on my screen.
Yeah, I think it says 1.3%. 1.3% is invested in futures contracts, but 87.72% is invested in money market funds. And then 13.17% is invested in cash. And you know what this does? It tracks Bitcoin to the percent every day. Wow. But 87% of it is in a money market accruing interest. 13% of it is in cash. And 1.3% of it is in futures, leveraged futures.
That's insane.
So, yeah. So you talk about like a strong cash position and smart deployment of leveraged cash in an asymmetric upside. Like, that's what that can do for you. But this follows Bitcoin to the same percentage every day.
Interesting.
That's crazy.
Yeah. And to that point and to the point I made, I just think it's a matter of time before the algorithms that control the market and the markets themselves kind of catch on to what we as investors all know, to what GameStop really is and what they're doing. Because GameStop now fundamentally is a holding company or an investment firm that has a subsidiary that sells games and collectibles, right? But that reframing hasn't occurred algorithmically, and so the price doesn't exactly. And it's a matter of time.
Hopefully, right?
Yeah, and so when Ryan Cohen starts deploying that cash into something that starts resembling leveraged investments, then we'll start to see it get priced in. But right now, everyone's treating it like it's just a cash investment. But there is asymmetric upside, but it's not priced in yet.
I'm gonna go
see what happens.
So it's part of the strategy. Then it's an anti-inflation. It's a hedge against inflation. But if it's the right price, you also see it as an opportunity.
Yeah.
So so you're sitting on $9 billion. I want to share one of the posts we got on X because people are saying, okay, it's a lot of cash, and some want to see you put it to work. One question is, would you consider a dividend or even a special one-time dividend?
The thing with the dividend is you got to pay tax, and so I look at it as in I own just over 8% of the company, and granted, we better not do something foolish. But if we don't do something foolish, then we're better off keeping the money in the company and looking for the right opportunity than going and paying a dividend and paying taxes.
You're speaking of looking for these opportunities. Are you? Because it feels you did the hardest part. You cleaned up a business that was awful.
Here, with the dividend, I love that answer. It seems like a lot of these Maloney's, these guys out there with the GNS or whatever the fuck that other one is, they want action out of our CEO to announce, attacking the shorts or do some kind of like dividend, or I don't know what the hell their plans are, but it's just a couple guys that come to mind that keep hitting my feed like that. That's a stupid ass idea in my opinion, especially a cash dividend. It's not going to push the button. It won't send us at all. All it will do, like he was saying, is remove equity from our company as we just did all this to build it.
Exactly.
It's like a short-term, quick little win on your shares, and you get nothing going forward. So I don't know. Yeah. And you're paying taxes on this shit. It almost is like a shill campaign, in my opinion. And I can
yeah.
All right.
I'm so glad.
I was just gonna, and if you think a dividend is going to save the company, just go back to the chart starting in like 2012 when they were paying a dividend, and tell me that saved the company. Like
no, and dividends don't help the company stock price at all. And I'm so glad he cleared it up, because it's not just a couple guys on your feed or my feed. Fitz, you've been here since 2021. You'll remember, without fail, once a month on Superstock, there would be a huge post about dividends and using it to fuck the shorts or whatever, right?
Oh yeah.
And that was when the company was bleeding money. It was a piece of crap, right? And people were saying it, right? And like Paulie just said, if you look at any company that issues a dividend, what happens if it's a company's worth $100 and they issue a dividend that in total to their shareholders will equal $5, their market cap changes to reflect the company now being worth $95 after they pay it out, right? And so, and what Ryan said here really mirrors, Warren Buffett's decades-old philosophy, where pretty much, not just because of taxes, but he thinks. I'll read a quote from him. Actually, it's really good. He says,
"In a very only paid one dividend."
Yeah, and he calls it a big mistake too.
Yeah,
and it was decades ago. But he says, in a very minor way, Berkshire shareholders have participated in the American miracle by foregoing dividends, thereby electing to reinvest rather than consume. Originally, this reinvestment was tiny, almost meaningless, but over time, it mushroomed, reflecting the mixture of a sustained culture of savings combined with the magic of long-term compounding.
Yeah. It's all about compounding.
It's all about compounding. We know Ryan hates spending $1 that they don't need on staplers or SaaS or whatever for the company, right? He does not. He's so conservative with spending. I don't. And I'm so glad this was brought up, because Ryan was able to basically, I kind of wish he spoke more about it in this way, even mentioned Buffett maybe, but he really just cleared up what his philosophy is around dividends. He'd rather the company, he thinks clearly from what he said to me, and I'll end with this. What he said is a signal to me, him saying directly, not even a signal, that he can make a higher return from the capital on hand than paying me $1 per share or whatever. That's it. It's that simple. He can make a higher return by investing that capital, getting a return, and that reflecting on the share price. Whereas my portfolio will increase when that happens, right? More than the $1 minus 37 cents on taxes that I would get and fucking buy peanut M&Ms. You know what I mean?
Yeah. The only so if you're talking NFT dividend on a blockchain that is controlled by GameStop, that maybe we take a little bit till they issue it and there's no cash equivalents, then maybe we're talking and we're cooking. But until then, everything else, this shit is like water to the shorts. Cash is
exactly.
So all right, I'm gonna go on.
But this next leg up, are you being too cautious? Folks want to know, where are you looking? Where's the magic coming from? The Ryan Cohen magic. Where exactly is that going to come from? Because it's not going to fall in your lap.
It has to be the right time. We are in a position today where the retail business is profitable. Maybe the future value, when you think about GameStop, has more to do. Again, this is a guess, but it may have more to do with how we deploy our balance sheet than the cash that the retail operations will generate. But it needs to be the right time. And, the capital markets are funny. They can go, and this happens every 5 or 10 years. They can go from green to red and they don't flash yellow. And so, there may be an opportunity tomorrow. You never know. I mean, we could wake up tomorrow and the markets can be down 20%, and GameStop will be in a position to take advantage of those opportunities when they happen. But,
I got you.
We'll look everywhere.
Okay. Yeah, listen, that's how we all do our own individual portfolios as well. I got you.
We'll look everywhere.
Okay. Yeah, listen, that's how we all do our own individual portfolios as well. I want to ask you about shareholder value. And someone said, hey, what about these convertible notes and the dilution that comes with them? Why does GameStop keep doing them? And why is
So he didn't hesitate after being asked that last question. He said it has to be the right time. And, I thought that was interesting. I think time has everything to do with not only the offerings that we've seen since last year, but the convertible bonds that we've got on the table right now. And I think it's got everything to do with the swaps that have been driving volume. And, time is just an ever-present theme in this saga from start to finish. So, I think that's a very poignant thing for him to allude to here, that it has to be the right time, not only for GameStop to deploy their capital, but for honestly every move along the way. So
yeah,
for every announcement, for every PR move, for every stapler auction, for every tweet, for every offering, it has to be the right time. And I feel like he knows that.
He can't control when that time is. He can only make sure that we're ready when that time comes.
Absolutely, yeah. And sometimes he may know in advance what the right time is for something based on something that's happened in the past, and he's just waiting for that to happen. And other times it may be that he's waiting for a specific thing to happen, and that's when he knows that it's the right time to pounce on an opportunity. But the one thing that he is so very sure of right there is that it has to be the right time before he's going to do anything. And in the meantime, he's more than happy to sit on cash and take guaranteed interest, because there is no downside there.
Nice. All right.
why and how does this add to shareholder value?
Well, they only converted a premium. And so, we've done these convertible notes at a 30% plus premium, and essentially we're borrowing money at 0%. We're giving a conversion right at 30% plus. So, if someone's willing to lend you money at 0%, then it'd be pretty foolish not to take that money, as long as we don't do something stupid with it.
Right. So obviously we got to talk about short selling.
That's the second time that he's brought up the word foolish here, and he said, let's not do something stupid with it. So, if you don't think Ryan Cohen's a doofus, then that's the bet, right? And I think that he's putting a lot of emphasis here on the idea that if you are a shareholder or a prospective investor in GameStop, you're placing a bet on the fact that this man right here is not going to do something stupid with the $9 billion in cash that they have.
Yeah. Nice. I'm just looking at the picture, the face he's making right now.
Yeah. like that's the bet. If you don't think that Ryan Cohen is a doofus.
and we don't.
GameStop has been legendary. At one point, it probably was valid, considering, again, past management. Just about everyone's asking about three things when it comes to this. First of all, why GameStop? And do you see any form of illegal synthetic shares or whatever it might be, illegal shorting? And what are you doing to fight back against this?
Even from when I made my original investment, I was fascinated at how much hatred there was towards an investment in GameStop. It was one of those things where, you would tell someone, invested in GameStop, and they'd be like, what? What are you invested in GameStop for? And so there's always been a lot of people on the other side of the trade, and I have my own personal views on it. I think that it's un-American to bet against business, but it's a free market. If you want to be on the other side, no problem. And if things work out, then those shorts ultimately need a cover, and that could ultimately be a good thing. So I don't think it's all bad. I don't really have much respect for short sellers, and someone who's ultimately not smart enough to find someone successful, they have to bet on someone's failure. But if things work out, then they got to cover. So let them short.
Yeah, and
it's fucking so good right
Such
there.
a great quote. Let them short.
Let them short.
And he also said, if you just put it in a vacuum, shorts got to cover. Shorts need to cover.
Yep, and we hear that a lot. Like, okay, if you're going to short, you're going to have to fucking cover. All short sellers are eventual buyers, right?
And he's saying if things work out, then those shorts ultimately need to cover. And right now, he's sitting on $9 billion in cash. That if he just sat on that indefinitely, then they're going to just accrue interest on that, and they have a profitable operating business. They're just going to keep getting more and more valuable over time, and they can wait out the shorts. He has time on his side. The shorts do not.
Yeah, and it's just getting harder and harder for him, and this shit's getting bubbling over, I think is the analogy I was thinking of. But yeah, it's I think
one more thing too that really resonates with me is, people often say, like what you said with Fitz, I forget the terminology used with the dividend, like send it or whatever, like fuck the shorts, or people say press the button, Ryan, press the button. I think we have to start, or I won't say the way I think about this is Ryan's not really looking to press a button on a Tuesday and make it go boom boom. He's playing the long game. Because short sellers literally play the short game, right? And so Ryan's playing the long game, and he's betting on his leader, on the team, and the way he's running the company and everything else. And he thinks that will outlast whatever thesis short sellers or anybody betting against the company has. And I think so. It's just really important for me to highlight that we often think about it in terms of press the button and this one thing that needs to happen, this one catalyst. Sure. GameStop can 100, 200, 300%. We've seen that before, but that's not the Berkshire Hathaway plan we talk about, right? That's a 1 or 2 day thing, or maybe a 1 week squeeze or whatever. Ryan's in this for the long haul.
Nice. All right.
Absolutely.
If things work out, then they got to cover. So let them short.
Yeah. And I also, to be honest with you, it's the shorts out there, particularly the large organized shorts, they've always had a platform on financial media. So they built these big short positions. Then they go out and bash the companies, which I always thought was sort of unfair as well. Have you looked into any illegal activity with respect to the shorts, the sort of synthetic shares, or anything out there where, a lot of your shareholders are concerned that these shorts never seem to run out of stocks, define these stocks as short?
I'm not scared of the short sellers. Okay. They can short the stock. It's okay.
All right. Hey, let's talk about
I'm spending my time on the actual business. Ultimately, the stock will take care of itself. It's really focusing on the business. And frankly, if people are in GameStop and they're looking to make a quick buck, then that's not the investment for them.
Oof. That was beautiful. I just, don't YOLO. I mean, that's the whole. If you're trying to play weeklies, and maybe this isn't the best play for you. I know it's not most of the time, at least. So
right.
You should invest in any investment for the long term. If you're day trading, then you take all kinds of risks.
Well, I think by now you know that a large portion of your shareholders are not day trading. They're what we call diamond hands. They believe.
Let's go.
They believed in initially, I think, to fight the system. To your point, they saw the same hatred that you saw. This hatred from the financial media, this hatred from Wall Street, this hatred from the elites who've looked down on them. They've looked down on small companies, and they've been able to stomp and trample over these people from the beginning of time. So GameStop became sort of this symbol, right? This symbol of fighting back. And people bought into it, right? I bought shares because I wanted to partner with them, not because I believed in GameStop. This is before you even came on board, but because I love to fight back this nation. That's how this country was born. That's why America's the greatest country in the world. So you've got folks who are in there with you. They're in the trenches with you. They are diamond hands, and I'm glad you're on the show today to help share your ideas and your vision, because that's all they really want. Words of encouragement, to understand what's going on with the company, to understand what the game plan is. So that's why I'm really happy that you're doing this right now for them.
Go off, Charles. That was good.
You're preaching to the choir. I mean, look, it's all, pardon my French, it's all a scam. It's all fucked up. You look at private equity, you look at venture capital, you look at all of these pools of capital, which really exploded since the financial crisis. And it's all perverse financial incentives. They don't give a shit whether they make money or not for their LPs. They're getting management fees. So they want to deploy the capital as quick as possible, and they're great at sales, and they're making their 2 and 20. And even if it doesn't go up, then they're still making 2%. I'm a retail investor, so I make money if the stock goes up, and I don't make money just by going and sitting on my hands. I only make money if the business does well. So that was the setup of the trade. You basically had all of these elites, fancy hedge funds and private equity and everyone else who knows who is shorting the stock, and then you had myself as a retail trader, and you had a bunch of other retail traders on the other side of the trade.
Roaring
Love
Katie.
that. I just love that he put himself on the side, and it was just a good little breakdown.
I listened to that one live, by the way, and I really thought he was gonna say, and you had Keith Gill and other, but he didn't, obviously.
Right.
The fucking internet would blow up.
Oh my god.
Your point, I point this out at least once a week, probably more often, since 2009, how everything has changed. The financialization of our nation, where money just creates money, and it's all about gimmicks and product, and instead of real, true innovation and hard work. And that brings me to something I just want to get you to share a little bit, Ryan. Just your own personal background, your own personal success story, because I think it's really something that can motivate a lot of people.
I love this part right here.
Where do you want me to start?
Well, we've got about a 5-minute window, so you decide.
I built this pet food company. Someone, I had an idea to sell 30-pound bags of dog food in the mail, and we ended up going head-to-head against Amazon, built a bunch of big warehouses, and ultimately ended up delivering a really high-touch, better experience focused on the pet category. And I've always been an entrepreneur. I learned from the best. My father never went to college. And thank God, by the way, if you look at what's going on now in the colleges today. So that's a competitive advantage, too, as far as I'm concerned. But I've always been an entrepreneur, and I invested in GameStop originally as a passive investment, actually. And as I engaged with the board, they had originally reached out to me to join, and they offered me a single board seat.
They fucked up. right there. That's where GameStop's board fucked up. They reached out to him.
Seats, and I was, and ultimately just be a patsy, one of whatever 10 or a dozen people on the board. And as I really got an understanding for what goes on in these corporate boardrooms, where you've got these board members that are collecting, I think on average, like $350,000 a year. The average board director makes in the S&P 500 just to serve on a board and to do absolutely no work. And so as I saw what was going on, and everything was in the name of corporate governance, there was nothing about the business or shareholders or anything like that, I felt like I needed to file a 13D and really just clean out the boardroom. And so today we've got a much smaller board, and we've got a significant portion of our board that's invested in the company with their own money, and there's no compensation. And we'll see what happens with GameStop. Hopefully things work out well.
Well, I can tell you
that was an amazing answer. It was, the last part is somebody that knows things are going to work out well. That's kind of how I saw that shit. Like, hopefully, he knows. Like, these guys are all in there with their own money, and they're following him, and I don't know. He's very confident. It was great to watch. That part right there was awesome. I just love that he got invited in there to be a patsy, and they just fucking took it over, or he just took it over. So, all right, here's the last part.
I've always been an entrepreneur, and originally as a passive aged with the board, ultimately just be a pending for what average like $350,000 a year. The average board director makes no work. And so as I, or anything like that, I felt like I needed to file a 13D and really just clean out the boardroom. And so today we've got a much smaller board, and we've got a significant portion of our board that's invested in the company with their own money, and there's no compensation. And we'll see what happens with GameStop. Hopefully things work out well.
Oh shit, I guess I missed I guess I don't have that last part in here. Let's see, part which was him.
I can, he basically wrapped on a personal note.
Yeah,
Ryan thanked Charles wholeheartedly, appreciated his professionalism, how in touch he is with the real world, sort of. And I think he said those things, especially kind of contrasting Charles's demeanor and outlook with the interview in the morning with the pack of fucking vampires.
He said, I don't do much with the mainstream media, but we've spoken in the past, and you're a good guy. So we need more people like you in the mainstream media.